Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Today's video we are focusing on Uber. Uber is one of the companies that people have been asking me to look at over the last few weeks, and just today the plan was to look at it today, and funny enough they've just reported the earnings. So we will see what the earnings look like. We will see the business side of things, how the company is doing, and competition side of things. There's a lot going on with this business, so we want to dig deeper and find out exactly everything we need to know, and then we'll look at the financials and see if it's a buy right now or if we should avoid altogether. Now what you see is my portfolio. It goes up and down every single week. I've been sharing it with the community for quite some time. I hope you love the transparency because I think it was just this week. Let's go back here. It was hitting almost closer to £25,000, but right now, as you can see, we basically about 121,000. But it doesn't matter. What matters to me is the fact that I'm buying high quality businesses, in my opinion, for the long run. Again, I'm not a financial advisor. You're gonna have to do your own research whenever we do these things. If you haven't joined us at the Patreon account, please do so. It really genuinely helps the channel. Like I said, yesterday's video, in the video yesterday, I've got about 2 more portfolios to check, and I think there's another one that came through last night. I will check that again this morning, so maybe 2 or 3 left, and I should be able to do that in the next 24 hours. And then if you have basically time, send me your portfolios. I'll have a look at it and I'll give you some feedback, inshallah. And this doesn't mean that like I'm a guru and know what I'm talking about, but it's just sometimes when someone else looks at your portfolio, think, okay, why do you own so and so, and just that type of question kind of triggers something. And it's been really interesting, the ones that I had looked at so far. And one of the things that we've learned is it's not just a one quick discussion. I've given feedback, and the brothers that came or sisters came back and said, so what do I do in this situation? How do we do this? And what should you do if you were in my shoes, and so on. And we basically had a long and nice discussions, which is basically all we're trying to do. Now let's start with Uber. Uber is right now up basically be the pre-market. I think the market will open in about an hour or so, and it is up. So despite basically the company reporting, so let's have a look at what they reported. So today is basically the time they reported. As you can see here, it says here they missed the basically EPS, but revenue actually beat by 230 million. And as you can see here, that's the information there, and everything else seems to be heading the right direction, especially with the basically with the outlook for the company. So the expectation, basically what they expected, is really, really good, which basically means if you look at this part here, it says 48.25 billion to 49.75 billion, representing growth of 17 to 21% year over year on constant currency basis, which is absolutely amazing. 21% year over year growth. And if you look at the graphs as well here, that's basically what you end up seeing. So here, for example, this is what they've just reported. So if I zoom in, you can see Q2 2025, the total gross bookings, were up 9.2% quarter over quarter. And year over year is basically 17%. Mobility, we're looking at basically 12% in terms of quarter over quarter. Year over year, about 15%. Delivery and gross bookings, again, basically 6-7% and higher than this time last quarter. And year over year, almost to 20%. So there are 3 different segments of their business. Each one of them is actually doing really well, quarter over quarter and year over year. So that's really massive thing for the company. And they just also announced 20 billion stock buyback, which is really interesting. They're buying back their own shares. And one of the things that I had as a negative about the company today was the fact that they have been diluting the shares. So it's really interesting to see that they are changing. So let's now have a look at the business side of things and the competitions and so on. And before we actually look at the financials in a bit more detail, and what I want to do is basically show you a quick clip from the CEO of the company on CNBC and what he said. This was a couple of months ago with regards to the Waymo and so on.
I think, before I turn over to my colleagues, that there's still a belief, even though Waymo's doing 150,000 a week, which I'm still thinking is not all that big, that there is an existential threat from autonomous vehicles away from you, some sort of overhang where people are saying, I'm scared.
Well, I think autonomous introduces both uncertainty and a huge opportunity for us. If we look at the U.S. market, for example, we think autonomous alone in the U.S. can be $1 trillion market. And the tech is definitely getting there, but the commercialization is going to be much more challenging, right? To be able to deliver autonomous at scale. For perspective, we're doing 33 million trips a day, right? Those are the kinds of scale that we operate at. And a bunch of stuff has to come together. First, the regulatory environment has to get there, right? And it's national regulation, state regulation, city regulation. It's going to take some time because regulators need to get comfortable with this new technology that's operating in the streets. Cost of a mistake is really high. Second, what you need is a superhuman safety record. Like, the opportunity that you have with these robot drivers isn't just to be better than humans. They could be multiple times better than humans. And I think the industry should take that opportunity and increase the bar on safety appropriately as a result of this incredible opportunity. Third, you need to mass produce these cars affordably, right? It's not about 100 cars or 1,000 cars. You need hundreds of thousands of cars. That is going to take a while, and the OEM industry is definitely taking notice. They're investing. But, these vehicle platforms takes years to develop. Then, once you have the vehicles, you need to operate them on the ground. Fleet operations, it's a ground kind of game. We're very familiar with that. We already have fleets all over the world. And then you need really high utilization because the cars are expensive. You need to operate them at high utilization both during peak times and during troughs as well.
Right.
The only way you bring all that together, this commercialization, is with Uber and the AV industry. It's going to take a while. As that time passes, you're going to see a lot of autonomous players coming in with these big transformer models, with the DeepSeek moment that we saw. The development of this technology is going to be cheaper and cheaper and cheaper. But we think that with the safety promise and with a partnership like ours, we can build autonomous to be a very, very big business.
You obviously have thought a lot about it, but we are getting a real-world test case in San Francisco, and I'm curious as to what you're seeing, because Waymo seems to be doing fairly well. Are you losing share, or are people driving less?
It's actually interesting, and this goes to the scale. Waymo's doing a great job. Terrific partner. We're going to launch with them in Austin and Atlanta. In San Francisco, actually, Q4, our growth accelerated on the mobility business versus Q3. So it's just too small at this point to make a difference in the overall business. And this isn't like globally. This is just in San Francisco.
Right.
Phoenix, our business accelerated. LA, our business accelerated.
So you'd expect the same for Austin and Atlanta?
I think in Austin, Atlanta, it's going to come
be your business anyway,
network.
right?
And so we absolutely do think it's going to accelerate because it's going to be a different product coming into the Uber ecosystem. And one of the ways that we have grown is building out all kind of innovative new product. Uber for business, low cost, 2-wheelers, 3-wheelers, share, high capacity vehicle. Autonomous is going to be another choice. And I think what you'll see in Austin and Atlanta is the uptake of AV is going to happen at a very accelerated pace. And what we've seen in Phoenix is our customers love the product. So what's wrong with that?
And I really like how he broke it down and when it comes to their business and where they are now and where they're heading. And this is one of the reasons why if you were to invest in this company, you're taking that risk, or you basically betting on the fact that all of the things that he just did with autonomous driving and all of these things, will come to reality, become reality in the next 4 to 5 years. Talking about $1 trillion basically market, which is absolutely huge. But one thing I really like is the fact that they are working with Lucid. So they are working with Lucid now basically on the next couple of years. They are working with Waymo, and they are not just afraid to work with these big boys because they know, the Waymos probably will take some shares from the company in the long run, but they've decided to work with them, especially in different states in the US. But the thing is with Uber, is not just about the US, it's all about the rest of the world as well. And there are other companies like Grab and so on that are growing massively in Southeast East Asia and, growing in the rest of the world. So with competition, there is so much competition going on. But with regards to the growth side of the business, it is growing massively. And if we look at for example, the earnings expectations moving forward for this company, it is expected. So this year they're expecting to about a decline, which is fine. So but we're almost the end of the year this year anyway. But for the next year, for example, they're expecting about 22% up 21%, 18%, and there's quite a lot of analysts looking at this company. 17%, 34%, and so on. That's just the EPS side of things. Revenue, we're looking about 15%, another 14%, another 11%. So the growth is definitely there. So one thing we're going to do now is just to look at the financials of the business. Yes, it's a great company. But what makes a great company? This is what makes a great company. $7.9 billion of basically total revenue in 2020. I think this was 2017, if you like, to right now where we are, which is $45 billion. And basically the cost of that is about $30 billion, to $15.2 billion of gross profit, which is absolutely huge. And then of course they're going to spend some money on the research and development and the administration side of things. And then that net income is the important part, which is basically about $12 billion. Now, if I quickly show you the free cash flow for this company, okay, so from I think this is 2021. So they were actually losing money, and then they became positive, and then all of a sudden, look at that growth from $390 million to $3.3 billion to $6.8 billion to right now $7.7 billion of free cash flow, which is absolutely huge. So they are growing in terms of their net income. They're growing their free cash flow side of things. And the other thing I want to look at is the balance sheet, just to see the total liability against the total assets and things like that. So assets, we've got $52 billion, let's call it about 53, and total liabilities of 29. So they have more assets than actually liabilities. So nothing wrong with the business side of them fundamentally. In terms of the profitability, if you look at things like, for example, the gross profit margin is 33%, the 5-year average of basically 33%, EBIT on EBITDA, for example, heading all the right directions, return on common equities and so on. What else can we look at on this side? EBIT margin, for example, about 10%, net income of that 27%. So profitability is fine. The growth side of things, okay, let's have a look and see what it says. Okay, so we're looking at revenue growth of basically year over year about 17%. The forward, we're thinking about almost 16%. If we think about the EBITDA, for example, growth about 94%. Forward, we're thinking about 39%. So everything you look at about this company, it is really a high quality business. The only thing I have problem with is just the competition, like I said, and there's so much uncertainty. And when you listen to the CEO of the company, they will tell you, yeah, there is a competition, but these are the things that we're doing about it. And just like you heard right now, working with Waymo and other competitors, and they know the market basically they're in, and they are innovating. And again, one thing that separates Uber from all the other companies is the fact that the software side of things, that's their really massive selling point. They're becoming more of a software company than anything else, which is absolutely amazing. So what we now need to do is, yes, it's a great company. Financially it looks healthy, and yes, there's a competition, but of course, if they can withstand with those competitions, to potentially work with them, they can actually still be very profitable business moving forward. And market cap, I think, is like 100. What is it now? $186 billion. I'm sure they'll probably become triple that in the next whatever years. So what we now need to see is, fundamentally is fine business, but what we need to see is valuation. Okay, and we're going to start with, first of all, with Refinitiv. And they are saying it's about 13% upside from where we are. $100 per share is where they think the price should be. And of course, it's slightly lower than that right now. I think it's 89 whatever. Oh, there we go. Shares, or $90 per share, whatever. Tip rank, for example, is looking at, if this loads up quickly. Again, similar thing, $100 per share, 15% upside from where we are. We've got 30 strong, basically buys, 4 holds. If we go back here, we can check the ratings as well through here. And if we go actually, Quant is saying is actually strong buy, as you can see here. So you can alpha analyst. Do you know what? Let's scroll down. There we go. Okay, strong buy, and buy as well. If we click this one, let's see what the price looks like. Okay, maybe they're currently updating. Let's see what's going on, because the company they just reported. But the one I wanted to get to is Fastgraph. Okay, so the company has been let's go to performance, for example, over the last whatever years since it became, I think it was 2019, it became a public company. Since then, has not beaten the S&P 500, which is interesting because I thought it would have. Okay, so 16% against that 13%. Okay, 13% against that 16%, which is interesting. Now, if we look at the forecast moving forward for this company, and we're using the estimates, so this company, we're using that 15 PE, which is absolutely ridiculous for this type of business anyway. You would be losing a lot of money right now. But one thing we will do is still basically use the normal multiple for this company, which is that 42. And if you bought this stock right now, you would be making basically 21,425, okay, which is basically 21,000 basically $425 higher than your original price. Now let's check the forward PE for this business, okay, and we can use that. So 31 is the forward PE. If we go back here and we say, okay, if that happens, that forward PE, let's go back here. So we're looking about 31. So even if we say 31, 33 in between, so that you will still be making 25% per annum, so about 17,000. By the time we get to 2027, you will have basically $17,140. So it still seems cheap based on not this 42 PE, the 35, the basically 31 forward PE that the analysts expected this company to trade in the basically the next 12 months. So if that happens, it still looks cheap. So yes, it is slightly cheap. If we go to Morningstar valuation, is $84 per share, so it's slightly fairly valued at this point in time. But I would definitely wait at least until if it goes below 80, then I think this will probably be attractive to me. In the long run, my main concern, like I said to you guys, is the fact that the competition side of things, okay. And as you can see the bulls and bears here, you can pause the video and have a look at that. This is becoming a household company, and I think it generally will do well in the long run. Right now, is it the time to buy? I would hold back for a bit until at least if it goes below 70, and we've seen it recently. I think it hit as low as 60 something. In fact, let's go and check the 50 let's call it about 60. So that wasn't not long ago. I do remember let's go in the, let's see where it was the lowest. What point was it? $64 in February. Okay, so let's see how it goes. But right now, for basically year to date, is up 48%, which is absolutely huge, and it's actually giving back some of the gains that we looked at the beginning. So that's Uber for you guys. I don't own it yet right now. I would potentially look into it if it goes below that 80, 70, 60 price, and it is very volatile stock, so I would definitely be careful. And this is the type of business that I will probably will not be buying more than 2% for my entire portfolio. So it wouldn't definitely be like 7 to 10% of my entire portfolio, just like some of these companies are, like the top companies that I own in this portfolio. Anyway, I'm going to stop the video here. If you are enjoying this type of content, it takes a lot of time and effort to put these videos together for you guys. I would definitely appreciate if you can join us on the Patreon account, like the videos if you can't, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.